Welcome to the Financial Quarterback with your host, Jim Lineweaver.
I'm Jim Lineweaver, your financial quarterback since 1993. As we all deal with continued market volatility, inflation, and other economic headwinds, qualifying dividends can be a great strategy for your portfolio. So here to help me explain the power of qualified dividends is Jerome Sheehan. He's a Chartered Financial Analyst and he's a member of our investment committee. So this is the first of a two-part series discussing possible dividend strategies. So Jerome, welcome to the show.
Thanks for having me, Jim.
So what are the benefits of these qualifying dividends?
So there's a few things that should be kept in mind when thinking about adding qualifying dividends to any investment portfolio. Number one, dividends can be a significant contributor to total return. Number two, they do need to be vetted very, very carefully. And number three, they can have very favorable tax treatment.
Yeah, and as you can see from the screen, this table shows just how much qualifying dividends have contributed to the total return of the S&P 500. In fact, 41% of the total return for the S&P 500 going back 90 years can be attributable to dividends.
That's correct. And there's many different types of dividend-paying stocks, but there's two that I think are particularly timely right now: bank preferred shares and oil and gas exploration and production stocks.
And today we're going to discuss oil and gas exploration and production, and next week we'll get to the bank preferreds. So the first thing to understand about oil and gas is that they are really just common stocks of U.S. or Canadian gas and energy producing companies.
That's correct, and many of these companies have paid down debt substantially over the last 5 years. They've reduced well cost, and many of them have break-even prices on WTI or West Texas Intermediate oil between $30 and $35 a barrel.
Yeah, and many of us that have bought gas recently know that it's well above that.
And when you take the combination of high oil prices and paying down debt, they're generating tons of free cash flow. And management teams have chosen to use this free cash flow to reward shareholders by increasing their base dividend, by adding a variable dividend component, and committing to significant share buybacks.
And as a result, many have mid to high single-digit yields even at these current levels.
That's correct. And if WTI stays meaningfully over $35 a barrel, this space can be attractive for quite some time. And right now, it's significantly over $35 a barrel.
And so that brings us to our final point about capital gains. So whether you use the two strategies we discussed here or any other dividend strategies, one of the benefits of this is the tax treatment.
That's true. Currently, qualified dividends are taxed at your long-term capital gains rate, anywhere between 0 and 20%, depending on your tax bracket. And for many investors, that's significantly lower than their personal income tax rate. So that's what makes this an attractive strategy for high-income earners and high-net-worth investors.
Well, it's great. You can have a maybe potentially higher yield and save taxes, which is always a great thing. So thanks for joining us today.
Thank you very much.
So if you have any questions about your dividend strategy or just want a second opinion on your portfolio, give us a call. We're always here to help. Stay tuned for Fox News Sunday.